Friday, everybody. Welcome to the Closing Beat, our quick show that we do to talk about the stock markets and everything going on there, the good, the bad, and the ugly. Thank you so much for joining us here today. As Fridays we usually do, we're joining you from the Speakeasy here, which you can kind of see just kind of our little get-together. We do our Thursday night classes for our customers there, and just talk about the stock market. So today we're going to do that with you. We also teach our customers as well. Hope you'll check us out at jazzwealth.com. That's the website there. Hope you had a great day and a great week. Don't forget this weekend is Mother's Day. Hope you have some great plans there. Your social distancing, brunches, and whatnot. We're doing the same. So enjoy. Hope you have a good time. All right. Our Guess the Dow winner. Right, we've got one of our clients actually won. It was close. It was a tie. It was almost a tie between a client and a not client, but the stock market rallying at the end of the day made it pretty simple for Mr. Jorge Chavez, who was the closest without going over 24242. 24242, yeah, 0.30 as the guess on the Dow. Congratulations, Jorge. You are the winner, and we'll be crediting your account $100 next week. So congratulations. The email has already gone out. Love it. Our class last night for customers was really on the economy, the stock market, and our portfolios as well, what we've been doing there, and some interesting stats as well. I love sharing that stuff with you guys. Our Jazz Artist of the Week will wrap up Charlie Parker's week here with a song called I've Got Rhythm. It was originally a George Gershwin song that he played. Really good song. It's maybe a little Friday night sitting outside hanging out. I hope it's beautiful where you're at and it's enjoyable there. Let's talk about the stock market, shall we? You got 455 points on the Dow, 48 on the S&P, and 141 on the NASDAQ there. Here's how it goes. Basically, you got a little bit of a rally to finish out the week. Well, let's look at the S&P first. So we're trying to fight our way through this halfway mark, the chop zone, as we've been talking about there. A little hesitant rally, but a good rally here today. We had the unemployment rate come out today, 14.7%. Payrolls down to 20.5 million people. I'm assuming you saw that number. I don't have to review that for you. I'll give you some stats. It's the worst since before 1945. I can't go back any further for this data point here. So it's the worst. That's basically hitting out max here. Let's take a look on the screen. Here's the unemployment rate sitting at 14.7%. The message that was sold today to investors and across all the media there, not saying it was bad or good, I'm just saying this was the narrative today, was that more than 3/4 of all the people on unemployment, as you see on the screen there, currently on unemployment, think it's just a temporary thing and that they're going to go back to work and all is going to be fine. I can tell you from what's going on around here, just kind of knowing a lot of people in this town and what's going on, that's not the case. We've got restaurants closing down. There's one in particular I'm thinking of here. That's 55 people that are not going back to work. Got a lot of restaurants closing, actually, gyms and whatnot. So I'm not so sure that those people are going back if they think they're going to be unemployed temporarily, but I hope that's not the case for you guys. So anyways, that helped the markets today. Most people going, okay, the unemployment rate's high, but really those people are just hanging out to stay healthy, and once things get reopened again, they'll go back to work, and so it's really sort of an inflated number was the message that was out in the markets today. We'll see. Now, add into the unemployment the way people responded to the unemployment number. You add in something like Apple, 2% higher on the day. Apple's going to start reopening their stores in several states next week. Boeing, 2-day rally for Boeing as it tries to reverse off its lows here. And actually not a bad reversal so far for Boeing. Up almost 4% there. They're going to open their 737 MAX factory later this month. Can't put them in the air, but they're going to open the factory. But that's good news. People looked at that. Uber, up 6% on the day there. Although we could debate the whole thing going on with Uber, but the bottom line is shares were higher on the day, and they are seeing an increase in the ride-sharing part of their business. Right, that part's profitable, by the way. If they were to just do that, they would make a profit. So I saw some of the comments where people were saying, "Oh man, don't just judge a book by its cover." Sadly, you have to invest in the whole company if you want to. If they could strip out all the nonsense, which Uber Eats maybe becomes something, but if they could strip all that, the ride-sharing platform itself, if you look at the fundamentals, is actually a profitable company. So, maybe spin them off or something. I don't know. I'm not telling them what to do. Anyways, they saw ride-sharing picking up there for them, which is a good sign. More people going out, spending money, getting things done. So that was good. And then also you had Disney, right? Disney up over 3% by the end of the day there. Shanghai theme park is reopening. They sold out in 11 minutes tickets, which I believe was not reduced capacity over there. I believe they're good to go. So that's what's going on there. So you add in all that, hey, you got a good recipe for, a stock market that can finish the week off strong. So that's what you have there. Of the 1,616 companies that reported earnings so far, there have been only 35 of them that have beat on earnings, revenue, and raised guidance. Not a lot of companies raising or even giving guidance right now. Chegg was the stock that has posted the best performance so far. I say that because we're coming on the backside of earnings now. All the big names are reported. We're going to start moving into retail now. But Chegg has performed the best. You can see that monster gap there. 32.27% on the day of reporting earnings there, or the day after reporting earnings there. Chegg, shift to digital learning. Everybody there is excited about that. Puts more money in their pockets. Everything's looking good. Other sort of virus-related names before we go to the sector breakdown here. I'll put in DocuSign hitting 52-week highs today, and Zoom, an obvious one there for those of you that have been watching that one. It was down on the day, but however, their earnings day moves 12.08% and 7.02%. respectively there. So give you an idea of how earnings season is kind of gone. We didn't cover it as much this earnings season. We will be changing that going forward, making sure you guys are getting the latest and the greatest. All right, as far as the indices today, the Russell 2000 was the strongest out of all the groups there, 3.5% on the way up there. Let's say the economy reopening is obviously a positive thing for the smaller names out there that may have been locked down. A lot of the smaller cap stocks, your boat manufacturers and things like that. So they did well. The NASDAQ was the weakest out of the group there, but still a nice day, a respectable 1.25% gain on the day there. And it's positive year to date. It's only got about 7% left to go until it hits all-time highs. And the whole virus mess will be behind it for the NASDAQ. Well, with the way it's been moving lately, that could be 5 or 6 days, maybe even less, before it gets back to highs there if this trend continues. That's just kind of blows you away there. Okay, out of the FANG names today, you had Microsoft, underperformed a broad index there. Oh, no. Amazon, there you go. Amazon did the same, only a 0.5% gain on the day. Netflix also underperformed and was lower on the day by 0.22%. And Facebook underperformed with only a 0.5% gain on the day. Just to give you an idea that it wasn't a day where only the big super duper mega cap names led the markets higher. It was actually a broad-based rally today. We talked a little bit about that yesterday. Now, let's talk about the FinTip series there. We talked on Wednesday how to get free stuff. We did Outside the Virus today. On Outside the Virus, we talked about a study that we did between the FANG plus Microsoft stocks, looking over the next 30 days to see the average performance there. So if you're interested in that kind of data, hope you'll check it out. Yesterday, or the day before, we talked about how the sectors perform going forward. I'm going to share that with you guys here. So here's one of the charts we shared in Outside the Virus. Looking forward 30 days at the median change of the overall sectors and taking the average median over the last 10 years. This is the returns that you see, energy being the worst performer and healthcare being the best performer. Below the ticker symbol at the bottom, you'll see the percent. And what that is how many times the percentage that it was positive over the last 10 years. So for example, healthcare median gain 1.38%, and it was positive 70% of the time. As you work your way through, you can see all the other stats in there, but I just thought I'd share that with you. It's the kind of thing we're trying to cover on Outside the Virus, but more of a hangout, just talk, whatever's going on that has nothing to do with the virus and has more things to do with, maybe things that aren't making headlines at the moment as virus. Well, that's pretty much the focus. Okay, let's go over to the sector breakdown. All of your 11 sectors in the S&P 500 were green today, and also they were green for the week. So every sector is positive for the week there. Your energy, XLE we'll use, was by far the best today, at a 4.56% gain on the day. Healthcare was the worst, but still positive by a 0.5% on the day. There are 4 sectors. Here's a little bit extra for you on a Friday. There are 4 sectors that are currently outpacing the performance of the stock market. Here we show the SPY at the bottom there, so you can look this up if you want to play along. You've got consumer discretionary, you have communication services, tech, and energy, which had a great day today. You can kind of see it peel away there, and obviously a great week. Now, 4 sectors beating the stock market. There's an issue with that, and I don't know if this is going to be good for you. I just was playing with the idea of how to dissect this stuff for you guys so you can learn a little something as well if you didn't know already. If you look at the 4 sectors beating the S&P 500 at the moment, and we're looking just over the last 5 days there, there's an issue with the way the rally happened this week, and we talked about this a number of times. Let's take, for example, the communication services. If you take communication services and you go inside of it and you take a look at how things are going, you've got essentially two companies that have 40% of this sector in terms of the weighting. So 40% of the sector is made up of these two companies, 3 stocks, and then the rest of it is made up of the rest. So if you look over here up at the top, you can kind of see that. You got Alphabet and Facebook that make up the majority of this sector, and then everybody else there at the bottom. Granted, everybody else makes up 60%, but you can understand how if those had a flat day, but Facebook was super duper strong on the day, well, that's going to move the it's going to move the sector overall. So that's communication services. Unfortunately, if you look in tech, tech has basically the same thing going on. There are 2 stocks that make up 40% of the tech sector, and obviously they've performed well lately, especially in the last 5 days. And so because of that, when you go back and you say, wow, look at tech outperforming the market, can you really, truly look inside there and say that sector as a whole is outperforming the market? I don't think you can. I mean, the rest of the stocks did well, but you can't really look at that sector and say that whole sector is doing well. It's really being pulled along by the likes of Apple and Microsoft. So just something I wanted to point out there for you there. You may want to pay attention to things like that going forward, because those individual stocks are going to start getting weak. And so I'll keep focusing on it as I can here to bring things to your attention. All right, for you a little bit longer term investors, so far month to date, it's a good month for most of the sectors in the stock market. What we did is we broke down every single one of them on the screen. 5 of 11 are higher for the month, and tech, of course, is leading the way so far. As you now know, just a couple stocks helping to move that sector. Energy continues really to be up there towards the top, and that's because of the price of oil. And unfortunately, financials at the moment are in last place for the month of May. So hope you enjoy that one there. All right, let's talk about a few other things here. Well, here's the price of oil. So oil up 4.5% today, struggling to get above the 50-day moving average. We'll see what happens next week. And you've got the price of gold down just a little bit on the day, 0.7% lower on the day, and that's going to bring its total gain to only 0.8% on the week. Still in a very nice uptrend, everything looking good there for gold. Let's take a look at your 401ks. Thought about a different way to do this. In your 401k, here is a different way to look at this for the week. So instead of looking at this every day, because who looks at their 401k every day, I thought I'd just bring this to you on Fridays as long as I remember. Value was the initial focus. Remember we talked earlier in the week and at the end of last week about small cap, mid cap value, meaning those under price, those seen as a value, those trading cheaper fundamentally. And so they initially started the way, but they faded throughout the rest of the week, and money moved back into growth. Growth is where people go when they think the economy's fine, recovering, or going to do better. And so you see growth near the top of the list with their gains. Small cap growth takes up the top spot there with a 4.1% gain. Anything that you see that says core, that's index. So small cap would be like the Russell 2000 index. Large cap, oh, no, we don't have that on there. So anyways, wherever core is at, core didn't even make the list there. Actually, that's probably not right. So we need to expand on that a little bit. But bottom line, that is where your 401ks land for the week there. All right, you got 8 new highs on the day. Actually, both of the spin-off stocks, Carrier, I'll go to that one, 52-week high for the S&P 500, spun off from United Technologies, and then Otis saw come up earlier, and it did go up there. Yeah, hit new 52-week highs, 2.2% gain on the day. eBay, a little bit of a stealth rally here. I get it, it's really sharp, it's really strong, but not really getting a lot of attention just in the main headlines there. Then you have the same names that we've been talking about all week in there. You got Newmont, Rollins, and ServiceNow. Hitting new highs as well, and OW, that's what I get for trying to do that. Although it finished the day lower. No new lows on the day. 0 new lows, and you have the names that have been on the new low list almost all week continuing their bounce. Cincinnati Financial up 1.3%, and Southwest Airlines did great today with almost a 7% bounce off lows. So looking good there. Those, I mean, I'm not saying these are buys, but the stocks that have been on the 52-week low list are starting to recover off those lows. So that's a good sign there as well. Oh, your Bitcoin people. Bitcoin above 10,000. I don't know if that means anything to you, but that's all Paul Tudor Jones related if you want to take a look at some Bitcoin. All right, earnings. Earnings next week, you got AutoNation, Cardinal Healthcare, Coty, Marriott, Mylan, Royal Caribbean, and Under Armour. And then after hours, you got Caesars, basically the only ones to kick off the beginning of the week next week. Remember, in the S&P 500, we are welcoming Dexcom and we are taking out Allergan. No, I mean, not me. The S&P 500 is adding Dexcom and Domino's, and they're removing Allergan and Capri from the S&P 500. That'll take place next week. Tuesday, I believe, is when that happens. All right, I'll try to answer your questions if I can, and then we'll wrap it up. Call it a week. Take it from there. Well, I see some of the questions there, comments about, yeah, people going to a restaurant. That's a little intense, right? I would go to a restaurant. I would have gone to that restaurant had they opened back up. But apparently they're not going to open back up. Also, I saw Sweet Tomatoes is not going to open back up, and their soup sort of mini locations aren't going to open back up. That one doesn't hurt me as much. I didn't really care for them. But that's it. Yep. Even if you buy a new car, where are you going to go? Yeah. Oh, Disney's going to open in Shanghai, 30% capacity. Awesome. Thank you for that. Cool. Well, that explains why they sold out so quickly, because I don't think that's a bigger park. I know it's bigger than what I'm used to, but I don't think it's their biggest park. There's always people, so the question is, how often do people predict a crash, and then how often does it happen? There's always people that are on both sides of the fence to the extremes, right? The people that believe we're going back to new highs. I try to bring them up when I see it. If it's somebody that's more reputable, I mean, anybody could just say we're going to crash, and they're always kind of the same people that are crashing and everything. But yeah, I mean, I don't know the stats on that, because you'd have to determine who do you want to include in your analysis. If it's just some guy with a YouTube site, like, he shouldn't be included. If it's an analyst that spends their time analyzing the S&P or the Russell or whatever, that'd probably be how you'd have to filter it. Yep. Hear ya. Allergan being removed. Yes, the acquisition. Yep. Let me just see. Yep, all trading under AbbVie. But I saw something earlier on this one. I don't follow these much, so pardon me for not being prepared on this one. I know the merger is done as of today. What's today? The 8th? I think it's today. Either way, there will be no more Allergan. It's going to be under AbbVie, ABBV. And I can't find what I'm looking for here. Yep, sorry. I don't want to spend time on that one. I can't find that one for you. We are in a bull market or bull market trap. Well, you don't put those two together. A technical pattern could be seen as a bull trap. That's something different. Bull market is defined by the bounce off of lows. So it's a bull market. There's no such thing as saying a bull trap is measured as such. It's just one of those things you find out afterwards. But we'll see. We'll see. I have a feeling that there's a lot of people that think they're going back to work and aren't going to. And I also think you're going to see a lot of businesses just throw their hands in the air and say, we can't do it. Even if the landlords of the businesses or the retail shopping centers give them some sort of, not even a credit, even if they just say, look, you can take the rest of the year to pay us on the existing rent, I still don't think you find a reason for businesses to recover if you're going to, down here in Florida, if you're going to tell them you can only be at 25% capacity. That's what the restaurant that I was talking about earlier did. They said, we can't make money at 25% and we can't come to a deal with our landlord, so we're out. That's it. That's a tough one. Yep. Who is your favorite broker for intermediate skilled investors? Maybe Thinkorswim, which is TD Ameritrade. If you're intermediate to advanced, maybe you like Interactive Brokers. Platform's a little tough. But nowadays, with everybody being kind of bought out, that's probably your best option. Use TD Ameritrade with Thinkorswim if you like that sort of thing. Just depends on what do you mean by intermediate and what you're trading. Yeah. Oh, so he says he thinks S&P is going to double top and then go back down. Okay, so well, that's, I mean, I'm not saying I agree or disagree, but that's interesting. So we'll get back up there. Oh, April, you're saying. I thought you were saying the beginning of, yeah, I see your question. I thought you were saying go all the way back and then come back down. That'd be impressive. That would leave a huge, like volatile move over history there. That would be something to be studied for a while. Yep. Haven't looked at the VIX calls lately. I know we looked earlier at the beginning of the year with somebody who was making that large bet through the month of May through expiration. So well done. I forget who they figured out made that bet, but I haven't looked at anything there. Yep. I understand there are a lot of people and a lot of funds that are seeing this rally going, no, this doesn't make sense. We're hedging. So that could be part of it. Kyle asks, is Cody your son? Man, what's the matter? Do I look old today or something? You're old. Let's say I look old today? No, man. Kyle, I'm going to kick you out. Man. I'm going to assume the question is, do you follow any, I'm going to assume you mean oscillators, if that's what you're asking, and no. How many taxable accounts can you open? You can open as many as you'd like. I wouldn't, but you could. Like in an individual's name, yeah. Nice. Yeah, I can't really speak for the brokerage firms. You want to test them out. You want to go to each one and see what features are you looking for and make sure they have it in the most efficient way that you want to use it. So that's where you really start. It's kind of like saying, what's your favorite food and should I eat that food too? Well, what do you like? Sweet stuff, salty stuff? What do you do? And test stuff out. So I would go actually test out all of them. I think you can get a free platform on all of them to test them out for a couple days or something. So that's what you get. Yep. Is Luckin not open again? Still not open? Son of a gun, man. Wow. Nope, not open yet. I don't see any updates on it either. Is it better to keep less than 500,000? Why are you, so versus what? Is it better to keep less than 500,000 in an account versus 10 million, 100,000? If you have, if you start going over the insurance limits there, they just usually buy insurance for you. They'll update you can ask for it. Yeah. Yep. But I don't know what you're saying, like where you're at there. How much of your time gap is the employment rate relative to the S&P? How much of a time gap is the employment rate relative? What? I'm not sure I get that one. Help me on that one. Yep. Oh, well, I know that, but I was the person asking about the 500,000. I was saying, like, versus what? Like, are you thinking about opening numerous accounts, using a different company? What is it you're trying to do? Yep. Money into precious metals? Yeah, a little bit. I mean, it's always the kind of catastrophe plan ahead type of trade there. Volume is basically average. At the moment, it was well above average during the downturn, as you might imagine. Yeah, basically it's average, slightly, just a pinch above average at the moment. Yep. Starbucks should acquire Luckin. Ah, that's a long shot, I think. It's a long shot. Yeah, yep. I love it. Tesla is opening back up Monday, I believe was the news there. Tesla's going to open up their California plant on Monday. Yep. Who is speaking most sense to you analyzing this market? Who do you trust? Meaning like a person or something? Like an individual analyst? Thoughts on selling premium in this choppy market? Well, if you don't want to do it now, then when's a better time, right? I mean, volatility is still high relative to over like the last year, so it's kind of your time to strike, right? You kind of got to do it. And you've spent, if you're one of those who likes to sell premium, you've spent years watching low volatility go lower and lower. So this is kind of the time where those people shouldn't really be sleeping. You should be looking for your trades and making the most of it, of course. Yep. Oh, yeah. I have no idea. Could the government shut down Bitcoin? I know China had some troubles with it, and then they seemed to change their mind before they changed their mind again. I don't know where they stand on it now, but I don't know. That one I don't know. I don't follow Bitcoin all that much. Sorry to disappoint you there, but I just don't do it. I think I'll wrap it up there. I appreciate you joining us here today. I do have everything I wanted to cover. Yeah, I do believe I have. So I will wrap it up. Talk to you guys next week. I appreciate you sticking around, hanging out with us, and hit the subscribe button if we helped you in some way, all that good stuff. And we'll see you next week. Enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.